The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. The day after the third round of, they call it a debate, it wasn't a debate, it's never a debate. But what I would like to just mention is that as far as I'm concerned, trying to be as objective as possible, there is one person that in the debate that is just anathema to that same person, and that is Donald Trump. One thing he's really good at, he is able to create an issue out of nothing for no reason. So if you're looking for excitement, I think the excitement was subterranean. You had to look for it underneath. And as I say, I don't think it was a debate per se, but it's just fascinating. And so we'll move on from there. The Dow is down 88 and down 56 at 18,146. The S&P is down 9 at 2135. The composite index is down 27 at 5,218. This is going to be interesting. Gold was up and now it's down 230 at 1267. There's a real good reason for it. We were looking for that leg D. We got it in the crude oil. We were looking for it in the dollar, and the dollar's up 40 cents at 98.34. Crude oil is down $1.14 at 50.68. And bonds up 21.30 seconds at 164 and 28.30 seconds. Let's go to the charts, and I want to show you something that I've been showing my subscribers, and we're going to be discussing this in great detail on the, here we go, in November. I have a webinar before the election, and it's discussing the markets, it's discussing what we should be looking for, and what we should be doing in terms of preparing for certain circumstances. We've already started doing that for a while now in my opening call, my Traders Corner, where we put all our positions on. And as you know, the day before the all-time high, we did start shorting the Dow. We took profits, went back in, added to it. And what we're really looking at here are this is the pattern. And chart patterns unfold over and over again. Gee, I should do this. I'm going to give me 1 second. Look at this chart right here. I'm just going to put this up because I need to show the chart pattern that we've been studying. And as far as I'm looking at right here, is that the arch formation that goes to a lowercase h, that goes to a lowercase m, continuous pattern, has formed. There's a little m right there, but there's a larger arch and now a smaller arch. And basically what this is the Dow chart, the daily chart, made that high on the 15th of August at 18,668, all-time high. It's only pulled back if you add up all the points from that 18,668 high to the 17,959 low. You're looking at 700 points. What's the big deal? I mean, we're talking about August the 15th, 2 months later, and we still haven't broken down. So we've used time and not price. One of the reasons being, in a political season, you can go through chart after election, going into the election, whatever administration is in power, they do their absolute best to maintain some stability in the market. They know it's kind of important. All right? Now, what we're really looking at here is that a takeout of the 17,959 low will be really important. Well, we've got a chart pattern that we've been following right here. Yeah. And that has the H pattern that goes to a lowercase, what happened to that? Which goes to a lowercase h, goes to a lowercase m, and then it's like a worm pattern. It just continues. And at some point, it takes out the left side low, which is already done. The 17,992 low, back in mid-September. It took it out right there at 17,559 about a week or so ago, 2 weeks ago. And now what we're looking at is we're looking at a situation where on the bounce in the 120-minute chart, I drew another arch. There's a pattern that we've been studying. I've been working on for ages and ages and ages. And that has to do with it's using the Elliott wave just as a concept. At this point, it actually has absolutely nothing to do with Elliott wave other than it's you identify 5 peaks of importance. I've really moved away from it because you'll see that in almost all the other ones that we identified correctly, actually, broke all the rules. So Elliott wave is only a concept, but it's really now I call it a Chapman wave 5. This is completely different to my technique that I developed back in the 1980s called the I used to call it the 7 waveform until I found out it can go to 9, 13 waves. But I now call it's the bicycle that goes to a bimode using higher peaks and lower troughs. All right. Now, what we're looking at is if I'm correct, and this is still early in the game, we just have no idea. The day's young. We've had already an up and down, up and down. But what we're really looking at is that there'll be a move in this leg which takes you under takes the Dow under 17,959. That 17,959 will start leg 5 to the downside. And at that point, you could get another bounce. And that's kind of what I'm looking for over the coming weeks going into the election. I don't think that the downside is a smash yet. And I don't think the upside's a breakout. I just think we're in a trading range, making lower highs and lower lows. And at that point, if we do get that, we can still chop around before we get it. We'd have to reassess, look at the stochastic, the MACD, etc. Now, this is going to be very important. Just before we coming up to the break, let me just quickly go through these. Remember yesterday I spent a lot of time talking about the peak Ds and Es. Well, look at this. There's your peak D in the weekly chart. We still haven't broken above 2185 in the continuous contract of the E-mini. Here is, I think I put this up earlier, but I took it away. Here's that single leg A. Remember the Chapman wave concept of a single leg A up failure syndrome? We got that right there. Market pulls back early this morning down to the 2131 level in the E-mini. And then zoom, it suddenly, for who knows what reason, it screams up to the 2141s, reverses, and I typed this in before we even started to break down. I said Chapman wave single leg A up syndrome. And we know what's the rule? The rule is if you break 1/3 to a half, there's a real good chance you're going to go down almost to the low. If there's an acceleration in the bar that's going towards the low, you just go right through it, and that's what we've done. And what are we doing with the left side, right side test? We are testing the low that goes all the way back to 4 o'clock in the E-mini 10-minute chart on the 19th of October. It sounds so far away. It's only just a couple of days. Wait, 19th? That was yesterday. Oh, my God. You know, when you're trading, you do the stuff 10 days. You get a lot of stuff done in a day. 2128.00 was the round number low, and we screamed up to the high that was made at 23. That's 10 past 11 at on the 19th at 2144.50. And now we've come all the way back down, and where are we? 2126.75. I'll be right back. Basil Chapman, Tiger Technicians Now. We'll talk about advanced micro devices. I had a call about an email, and we'll talk about that. Now it's down.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I just had a question about my 10-minute chart. This is the pattern I'm looking for. You made a trough F, and therefore you can get a bounce. And I always do this. I do this even when I'm trading. I type in the arch formation, and I do the V shape if there's a look of a V shape. And this says at about, going all the way to 1 o'clock, about 1 o'clock. That's a long time. It's going to be much quicker than that. I should have made it much shorter. I would actually put it at somewhere around 11:50. There should be a test of this area right here where the cluster formation is around about, we're at 2131. The 2134-35 area is going to be really strong resistance. I'm sorry, 34, 35. Right there, 2134 is the 9-period exponential moving average. We'll see what happens. All right, so in the meantime, back at the ranch, this is what we're looking for. And the question about American Express, I said I'll mention advanced micro devices. I think first I need to go back. Remember, all the time I've been saying, as far as I'm concerned, oops, that was the wrong one. Let's see, ES right there. Why does it not default? Okay, here we go. DXY. The dollar index, I've spoken about this for quite some time, and I had said that as far as I can tell, the pattern that we're looking at in the monthly chart is suggesting we've got to look very closely starting at the daily. And there was a left side, right side price time miss because it took 2 extra days to get to 97.50. But the rule of thumb is in the Chapman Wave. I never typed it in. I'll do it right now. I was going to get my CD. I did. All right, here we go. There's a left side, right side price time. You know what? There's no rush. No rush. There's no reason to rush. There's a technique called the Chapman Wave cup and ladle pattern. What is that? Well, for so many years, I've been so disappointed in the action of cup and handles. And I have to constantly remind you that Investors Business Daily, it's a major part, a major component of the techniques they use, but they use it in a very specific way. My contention is that a cup and handle, that is where you get the cup formation and then you get, before you break the left side high, the lip on the left side, you have a little kind of a handle, a U-shaped pattern, and then you break out. My contention is powering through a resistance level has way more momentum. I should actually ask someone like Dave White to talk about this because it's exactly in his wheelhouse, bailiwick, because my contention is that cup formations are not quite as powerful as V-shaped formations or inverted V or arch formations. And when you go through either in a cup or a V-shaped pattern and you smash through the left side high, there's a real good chance you're not only going to go to a D, you could even go to an E. And then what happens is the lip on the left side, in this case 97.57, and we're at 98.36 right now, becomes the key support level. It is a powerful technique. It's like the Chapman wave overlapping wave. This is powerful. And you can see it here. Look at the MACD, how strong it is. Look at the stochastic at 92%. So this is breaking away from that what is it? 2 months, 3 months, 4 months of 200-period exponential moving average testing. Now we're away from it. It's goodbye. That's what it's saying. And what's really important about this is look at the weekly chart in the dollar. The dollar is making this double. I had drawn this in. You remember I spoke about it. I said there's a pattern that I've studied for a long time. It's the cup with the second cup. It is the inverted M formation, lowercase m, and backwards. And what we're looking at is, as we get towards 100, and we're real close, $1, I'd say yesterday $2 up. Now it's less than $2 up. We just need 101.52 to start leg D in the monthly. So this is leg D already in the weekly chart. The MACD is good. Stochastic's okay. It's not great. It's at 72%. And I suspect that we will not get a turn down in the dollar until the stochastic gets into the 85% area, and it could even go higher into the 90s. And that makes this really important because this pattern suggests that there's tremendous resistance in the hundreds. Now let me go to the monthly chart. And the reason why I've not been all that keen on gold, although we might be putting on the trade just as a trade, because very short term there might be a little bit of a pullback in the dollar. And what I'm looking at here is that there's a real good chance. Let me just double check something. There's a real good chance that this pattern in the monthly is going to test, I'd say, between 99.80 and 101.20. A punch above that would make it a leg D. And not only that, would it make it a leg D in the monthly, if this is in a buy mode, which it is already in the monthly chart, that would suggest I have to watch to see if the MACD is ever going to cross positive. If it does, we're talking about whopping moves in the dollar. And I don't like to do that. I like to just do one step at a time. The one step says we've got our leg. Why did I put an E there? We've got our leg D. That was the requisite. You remember yesterday we spoke about waiting for the leg D in the crude oil? Boom. Crude oil goes to a D and it pulls back sharply, and now it's got a peak D. And the MACD is pulling back, but it hasn't crossed negative, and the stochastic is negative under 80%. So we're going to be watching this one closely. Why did I suddenly bring that up? Because we used to look at crude oil going in an opposite direction to the dollar. This is the first time they've gone in unison in quite a while. That's number one. Number two is we used to look at gold as going inversely to the dollar. Well, this is the first time in quite a while that we're looking at, look at this, that the dollar, in fact, has been going to the upside while gold has been going to the downside, but gold has actually held quite well. If you consider where it is, even today, it's only down $2, $3. It's above the 9-period moving average, and that says that very ugly candle in gold from the week of the 7th of October, 3 weeks ago. Normally, what you would do is you get a little doji candle, an attempt to rally, and then a close below it immediately afterwards. So far, with Friday still to come, gold would have to smash from 1266 to 1245. $25. I don't know if it's going to do that in one day. But in the meantime, back at the ranch, what we're looking at is within the context of all the markets. You remember, I like to talk about it as a Rubik's Cube. You try to put the pieces together. What I'm looking at is that the momentum in gold that smashed to the downside was quite significant, and it really does limit the upside to the 200-period moving average of 1284. But in fact, what should happen is an arch formation should unfold, and then the big test will come. Does it break the 1243 Oh, that's 1243.2. So it's underneath that. That would be the move that I would have expected if that doji candle had the usual implication in a move like this. So it hasn't done it yet, but a close under that, it doesn't have to be a close. Just a break tomorrow below 1243 would imply, yeah, that's exactly what you expect. And that would weaken the monthly chart a great deal, which has only made a peak A. All right, I think I've done a bunch of that. There's stuff that I wanted to do. There was a question about American Express. I'm going to just do Advanced Micro Devices first because that's the email that came in first. Advanced Micro Devices comes out with earnings today. You see this wedge pattern in the monthly after peak E? That's a sell mode and remains in a sell mode in the monthly chart. I'll talk about that, and we'll talk about that leg B up in the monthly when we get back and what could happen after earnings tomorrow. This afternoon. I'll be right back. Dow's down 27, S&P's down 5.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. So let me just do this again. So Advanced Micro Devices, earnings come out this afternoon. The question was, what was the question exactly? Hi, Basil. I'd like to get your take on AMD going higher, even if it is in the semis group. I have no position in it. I think earnings after bell. Thanks. Yes, so let me do this. Let me just show you something in the SMHs. The semiconductor index, while it's holding well right here, it's up a penny at 67.41, has made a peak E at 70.21, a peak E at 70.21 on the 10th of October. screamed down to the 66.06 level. It's had a little bit of a bounce, a peak A, peak B minus is really what you look for in the Chapman wave lowercase h, dreaded H pattern. But it's really the weekly that I'm looking at. Look, the weekly says we made that high. I should have an alternate count at this point because of the MACD and stochastic. I'm keeping it as an F for now. Not only that, in the Chapman wave instant restart, if leg E/A is really strong, there are other connotations in the work that I do. So this says to me that I might be right in this peak F that's being made by tomorrow. It doesn't go above 70.21. I see no chance that it can do that, not with Intel week. And that says to me, that's fine, but you should, for safety's sake, put in F/B. So for safety's sake, just to make it real clear, the way I like to do things, always a little bit cautious, because in the Chapman wave methodology, there are certain aspects that are absolutely clear, and I talk about them. Leg D, remember, waited for crude oil, boom, and it makes peak D today. Dollar's gone very strongly in its leg D, and it's extended the weekly chart, and there it looks very strong. It does look like a D that should go even further. So I'm looking at this and I'm saying, hey, wait a minute. The MACD in the weekly chart is pulling back the stochastic. I like to do this. I don't like messy charts, but I'm just going to show you this right now. At that high right there, in that area, back in September, August, around the 26th, 27, 28, the stochastic was up in the 95 area, and then it pulled back. And now, for this high that was made in the weekly chart for this past week, what are we looking at? We're looking at way weaker, look at that, way weaker stochastic. The MACD is a little bit stronger, and that says to me, okay, don't get carried away. You've shorted, you've done different things to be looking at the short side. Where would you be wrong? Well, I'd be wrong. Actually, I'd be wrong if it goes to 70.22. I'd be wrong. And it does it in a week or two. But I'd be starting to hedge my bet a little bit if we start to break into the 69, somewhere around 69.40 area. That would say to me, okay, you got to be careful because it could go all the way to the top, back to the top. So this is the starter position. But because of Intel, INTC, I'm suggesting that it is telling us and for Intel that is a peak F. There's no other way I'm going to be able to count that at this point. But in the monthly chart, I've got an alternate count. Is it F/C? Is it C? I think I want to stay with C just for now. And it tell me there's nothing that's going to change because we've already got positions in the semiconductor index. But now I can go to advanced micro devices, and there's an under the wire stock. Look what it did. It went from under 2 to 8. The round number was it? No, it was exactly. I remember now. Round number all time recovery high, 8. Round number high, and now it's pulled back, and it is at 6.86 after going under 6. So the action in the weekly chart suggests to me that I really have to be looking at this pattern right here, the arch formation, and I'll be wrong. If this starts a leg B and it holds it very well, and advanced micro devices, let's say after the news it comes out, really great quarter, except looking out. I think that's what my answer to this person was, looking out. I think they're going to say that it might pop overnight, and then over the evening into tomorrow morning, we'll know, soon enough, we'll know whether or not it's starting to fail. And if that's the case, it'll be down tomorrow and not up. And if I'm wrong, it's going to hold any good earnings news, and it should have good earnings news. Look, it's done very well so far, and this is more than one quarter, so it's got all of this action that's positive. So my suggestion is hold off. If it's bullish and it holds very well, and advanced micro devices every once in a while goes against the semiconductor index, it's just in its own world, always has been, going way back to Sanders. What was the guy's name who used to run it? Way back in the 70s and 80s. And this stock has always been a stock. I wonder if I've got the history of this. This stock, you could make and lose a fortune all the years in advanced market. Look at this. I mean, talk about moves. This goes from back in October of 1990, it goes from $1.88, and it makes a little bit of a top at 48.50. in June of 2000. And then it comes down a little bit. It goes from there to $3.10. But no, wait a minute. It goes peak A, B, C. There's your D. It goes to D at 42.70 in March of 2006. Oh, then it comes back down a little bit. It comes back down to $1.62. And now it's in this first time it's in the trading range for this long. Usually it's already started as a big move up. So this is a stock that you actually want to buy, put in your, like a biotech, put it in your drawer and say, ho-hum, a year has gone by. Let's see where it is now. There it is, Jerry Sanders. Thank you, Duffy. I knew you would be the one to know. Yeah, I mean, this guy's been amazing. I don't know where he is or if he's still around. But what a stock. I mean, it goes from $1.75 in January up to $8. Even that is spectacular. So, okay, all I'm saying is they do things and they do things in a big way. This is a nice move if it can support itself and not break down under yesterday's low of 657 by Tuesday of next week. Instead, it's holding tightly. Let's talk again, and then I'll tell you what I think you can do, because it's got a peak B, which could fail, but it could still go above 715 and make a C and then a D. So let's just right now hold off. Don't do anything before the earnings announcement. It's just not worth the risk. Okay. And if you get the down move, then you know that you were right to step aside. If you get the move up, that'll be a leg C, and then you can play it for the D, and then for a retest of the 8s if everything works out fine. It's not going to go too long against the SMHs, so we're watching those SMHs. All right, next question was American Express, AXP. Now, this is what I wanted to talk about today. I've talked about rotational correction, which is what we've been under. Look, this is American Express trading up 9%, up 5.59 at 66.77, broken all the previous highs in this daily chart in a leg B to the upside, unless we can call it a rogue wave. Yes, we can call it a rogue wave because the A was right down there at 57.15 on the 28th of June. So this could start to fail. There's no need for it to fail right now. I wouldn't be doing anything in American Express. I had recommended about 3 weeks ago that American Express should be dumped out of the Dow. Why you should have 3 companies like this? Visa. Look, Visa's already made its top peaky. It's struggling. MasterCard is testing its top, making a cup formation. So I think that we're looking at this, and I think that they're all going to be coming down over the next week or so. That's going to be the big test where they come down to. So yes, American Express, what's the wave count? Unusual wave count. And Visa, we just did that. You know what? I'll talk a little bit more about it because I rushed through that. I'll be back. Basil Chapman, Tiger Technicians Hour. Dow's down 40. Yes, what happened to that chart right there? Can't find it.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Just finishing this up here. I'm sorry, I'm taking a little time. Okay, let me just finish this up. This is the XHB I was asked about. Now, I'm going to be doing this webinar coming up for first week of November. But I've had so many questions that I'm thinking now I'm going to do something like Steve has just done very successfully. I'm going to have maybe a three-time analysis webinar that is just based on the techniques. Look how many Ds. I was asked about the XHB. XHB, weekly chart, sell mode. I was asked about travelers, TRVL, TRV, and XHB, which is the Spider S&P home builders, is really plummeting right now. I was asked about travelers. So look, I've got, now I can put a down arrow in the weekly chart because there's a peak D. The monthly is a leg D, and it's almost certainly going to make a peak D this month if it acts so poorly. But wait a minute. Look at the daily chart. This low right here, if you go A, B, C, D, and it goes to an E. All right. And this says that travelers is now in real trouble. One by one, we're looking at these very important Dow and sector stocks and indices. Not good, not good at all. We've got Athena Health, which, remember, I spent a little time on, not a lot, a lot of time over the years saying, I've got a major top in Athena Health. We tried to shorting, I can't remember now. I think we were successful a little bit and unsuccessful, but we then took a nice profit and then we didn't get back in. Athena Health Records, Athena Health Inc. Comes out after the bell, and it made a peak E in February of 2014. It's made this huge H pattern, almost looks like the gold chart, and it's made the same pattern in the weekly chart, the lowercase h. And look what's happened, and that was a peak F. The 5th of December at 172.42. That was the last peak D in the monthly and the weekly, and now we've got a peak E in the daily on the 10th at 132.84. And it says to me, even if there's a bounce, this stock is in real trouble. So I'm thinking that I will set up a bunch of webinars that just teach some of these techniques. I've just had so many questions about it, and so many people are using the Chapman Wave methodology that maybe that makes sense. But I am having a webinar, and this is just for subscribers, coming up the first week of November. Check it out. I think it's going to be, at that point, we'll have already got another couple of weeks down. It's going to be giving very clear indications. After all, how on earth can we go to new all-time highs under these conditions? But the monthly charts are suggesting we should go higher, and that's what I'm going to be discussing. So we've got just a moment here, a question. So that was the TRV, Bank of America question, and BAC. BAC, very nice. This is that a peak? No, 73.73. This is A. Is that a high? No, 23.23. This is AB. This is a nice looking chart. So this is suggesting that the Fed, and I'm sure they're going to be wrong when they do it, the Fed is going to try to talk about raising rates and maybe do it. This is going to be very interesting. But it's saying that the financials, the XLF, Bank of America is acting well. XLF, acting okay, and I haven't got enough history, but I can go to the BKX, which is the KBW Bank Index. And there you go, peak F/C, and now it's going to a potential D or G/D, and I have to put a D once it does that, a D in the daily. So we're going to be watching this one real closely, and it's G/C in the weekly. I have a target for this round about the left side, right side price time match, and that says within a couple of weeks it should be at least testing the 77.14 level. I don't know about that. Anyway, it says by the 18th, the week of the 18th of November. Wow, I don't know. We'll see. But anyway, so far it's acting pretty well, and the monthly chart is acting pretty good as well. So I got that out the way, Sarah wants to know about the IYT. The IYT got stalled at a peak G/C. I could have called this a double top, and I'm going to do that for now. I'm going to call it peak C1 because it fits all the criteria. C2, which is fractionally lower, C2, and I always put a red plus sign. I can't put a down arrow because that wasn't officially the high. I always do it at the high or the low. So that says you're in a sell signal, and the technicals say you're probably a sell mode, but I have to wait for Friday for that weekly chart, which is still looking pretty darn good. So the IYT is holding well. If crude oil falls, let's see what happens. But the XAL, which is the airline index, has another strong day today, up 38 cents in leg E. And that's an E and a C. Oh, that's a D. You can't go C. That has to be a D. So D now in the weekly chart says that we might be looking, and that's a leg B in the monthly chart. See, this is the reason why I can't get overly bearish on the market. I can get short-term bearish, but I can't. I'll be looking to put long positions on at some point within the next month, I think. And the way I'm looking at it is if there is, in fact, if the transportation index is, in fact, a leading indicator, this is the airline index acting very well. But if the transports historically since Dow days back in 1890s, if from that first 30-year period, the Dow theory came into place somewhat in the early 1900s. If that's going to still work its magic, then the IYT, that's the iShares of the Dow Jones Transportation Average, should be powering. This is leg B in the monthly, but it's really not very strong. If the IYT in the next 6 weeks, I'm going to give it a full 6. In fact, I'm going to give it until December, the first week of December. If the IYT is finally being able to get to the 150s, that'll be really bullish. If it breaks down and goes under 135 at 6 points up and 9 points, I don't even want to go 9 points. I'm going to say 137. 137 on the downside, that's going to suggest strongly that everything's on hold. So that's the outlook right there. That was kind of, I'm not sure if that was the question. Yep, we did all of those. I've done all the questions so far. And then in the den, a good question came across, AKS Steel. AKS. Now, this is a small steel company, acting very nicely. It's at 5.06. It's up 23%. And the person who asked me it, I kind of know that he likes the longer-term outlook. And what I had said is, yeah, if you want to start a position, and just a starter position, this right here at 506 started, but this is for him. This is not for everyone else. Why? Because the weekly chart is just repairing damage, big damage from the 709 high, 7.09, to the low of, what was that, $3.90 or something? $3.87 in the week of the September the 16th. And that suggests to me that you won't really know if this is going to be, all right, I really wanted to talk about was the diverse market. Yeah, I'll do that. So in AK Steel, this is so typical. Look what we've got. We've got AK Steel holding really well, but it's a small company. And why is this going on? Why in this particular, I call it a rotational correction and a rotational recessionary period. Why? Because of CTAS, Cintas, Oh, breakdown again today. It's at 106, and that's overalls and clothing rentals. And that's saying to me, companies are not expending that money there. So if you're looking at AKS and you're looking at the steel, look at the SLX. This is the Van Eck. It is at highs, recovery highs, that is. I'll talk about the rotational aspect of this market and what I'll be delving into when we get back. I'll talk about what we're delving into the first week of November when I do my webinar.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So getting back to the SLX chart, which is the Van Eck Vectors Steel ETF. Look, there's that cup. Remember I talked about the cup and handle? There's a little handle inside. There was a cup right there with a handle. And then it goes to an E. It didn't break out significantly like I talk about in the Chapman Wave cup and ladle, although this is really, the cup should go all the way to the 3709 high of the week of the 8th of May of 2015. So this is a pattern that I'm looking at, and he has another little handle. And the stochastic is at 72%. It's not strong, and the MACD is turning just about to cross higher, and that is good. So when you look at this, and remember I was talking about the diversity, I said, look, here's American Express skyrocketing. The others look like they're kind of tired of Visa and MasterCard. And we've seen this rotation where IBM was smashed to the downside the other day. And then lo and behold, United Health screams to the upside. And this is the rotational aspect. And now I'm looking at steel, and let me just do this quickly. Let me show you. So we go back to AKS. it kind of looks a little bit like this chart that we're looking at. Not really. It's good as it stands. Look at X, U.S. Steel. Had a great day yesterday. Whoa, another great day today. It's up 87 cents. Nice action. Oh, it was on my list, and I was thinking between Alcoa and X, and then I did nothing. Alcoa, not bad, but X is stupendous. Look at this. Up 4.82% at 1937. Nice move. But look, the weekly chart just says, okay, a nice move, but it's not really doing anything. It's probably going to bounce a little more, and then it'll stall. But we don't know. And I'm saying to you, look, the chart patterns are all different. And yet, if you look at the composite, and that is the X, silver, XL, X, SLX. SLX, look at that. That's really very nice. I had drawn the V-shaped pattern. We wanted to buy this ages ago, and I kept missing. Where was it? I can't even find it. After one of my webinars, and we missed it by a few cents, and then I never dived back in. But you know what? It's going to be it will be a buy again in the next pullback. So the XLX is acting very well. So I wanted to talk about that. When you talk about this particular market, let me go back to the Dow, and I'll be back with Tom O'Brien later on this afternoon. We'll talk about it a little bit more. This is the pattern that we're looking at, these arch formations. When you're stuck in a range, you can stay stuck in this basically like a rectangle formation a long time, longer than your patience. And remember that, rectangle formations, look at the, let's just go back to this one here. Look, this is the 120-minute chart of the E-mini. Now look at the E-mini. Look at these rectangle patterns. A long rectangle, then it breaks down. A long rectangle, and it's gone to a peak E, and it's pulling back. So keep in mind, what pattern are you trading? All right. So we're about to wrap up. Let me just quickly go to the volatility index. And the volatility index is indicating that, hey, don't get too excited. At 14.53, it's only up 12 cents. It's holding quite well. It hasn't broken down. And that's saying that at 40.53, remember, in the 15s, you start to see more intense selling. In the low 14s to the 13s, you see buying. This is giving support to the market. So just keep that in mind for the rest of the day. We'll be watching it very closely, because if, in fact, the Dow's down 30, it's tried the downside, it's tried the upside, it's wiggling and woggling, I would say to you that if the volatility index goes even just 20 cents higher, this market will go back to the low of the day. And if it goes 20 cents lower to the 1433 area, and it's at 40.53, you will suddenly see another big bounce in the Dow. But I just like I said yesterday, I don't think that the debate will prove anything. At the end of the day, we'll be back to exactly where we were. And by tomorrow morning, I said to subscribers, we'll be looking at the downside. So thank you for being here. I appreciate it. And I'll be back with Tom a little later on. Basil Chapman signing off. And check out my webinar coming up on November the 2nd.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.